Welcome again to Kenya Market Daily Podcast.
Great to be here.
Today, we're not just reading headlines. We're taking a truly insightful deep dive into the latest market dynamics from June 26th, 2025. We've pulled together the most crucial insights from your AIB, AXYS Africa Daily Whispers and Daily Market Watch reports.
That's right, the key sources.
Our mission is to distill the absolute most important nuggets of knowledge about the Nairobi Stock Exchange, with a keen eye on those key companies you've been asking about, the ones that really move the needle.
Exactly. We're going beyond the surface level numbers. We're going to synthesize all these detailed reports, pinpointing the subtle patterns, and crucially, connecting the dots.
So you can grasp not just what's happening,
but why it matters for your understanding of the Kenyan equity landscape and what it implies for the future. Prepare for those genuine aha moments as we uncover the underlying forces shaping these vibrant markets.
Okay, let's not waste a moment then. Let's unpack the overall market summary from June 26. Right off the bat, we saw a remarkable surge in equity turnover and a very positive shift in market capitalization. What's the real story behind this burst of activity?
Well, what's truly fascinating here isn't just the increase in activity, but its sheer scale. Equity turnover nearly doubled. In a single day, yeah. Surging by an impressive 99.9%.
Wow.
That's a jump from just over KES 232 million in the previous session to a staggering KES 465.13 million.
Okay, that's huge.
And this massive inflow of trading energy didn't just fizzle out, it directly translated into a healthy 0.9% uptick in the overall market capitalization.
Right.
Pushing the total market value to KES 2,361.14 million, crossing the KES 2.3 billion mark. This isn't just routine trading. It signals a significant surge of confidence.
A near doubling of turnover in a day certainly sounds like a bustling market. Does this robust activity show up consistently across the key indices, or are there any divergences we should be aware of?
The indices absolutely echo this bullish sentiment. The Nairobi All-Share Index, or NSE, clearly confirmed this upward momentum. It rose by 0.9% to close at 149.88 points.
Okay.
But it wasn't an isolated game. We saw widespread positive movement across the other key indices, too.
Like which ones?
The NSE 10 index was up 0.7% to 1,480.14. The NSE 20 index climbed a strong 1.1%.
1.1%, that's quite strong.
To 2,342.91. And the NSE 25 index increased by 0.6% to 3,841.60.
So pretty broad-based.
Exactly. When you see such broad-based gains across these critical benchmarks, it paints a clear picture of strong, pervasive market confidence. Suggests investors are feeling optimistic right across the board.
So the indices are signaling broad-based positive trends. That brings us to a crucial factor: foreign investor sentiment. What do the numbers tell us about their participation for June 26th? Were they net buyers or sellers? And what does that imply?
This is a really important piece of the puzzle, because foreign capital can often be a bellwether for market direction. And the data here shows a very significant and positive shift. Foreign investors were net buyers for the day.
Net buyers. Okay, how much?
Recording net inflows totaling KES 51.68 million. Now, to put that into perspective, the previous session saw net outflows of KES 35.53 million.
Right, so quite a swing then.
The big swing. We've gone from capital leaving the market to substantial capital flowing in. Their participation mix for the day was quite telling as well.
How so?
54.5% foreign compared to 45.5% local.
So foreigners dominated the activity.
Dominated the net activity, certainly. It indicates that foreign players are not just participating, but actively leading the buying charge. The strong foreign interest is a key driver for the day's bullish performance and suggests external confidence in Kenya's market prospects.
All right, let's shift gears and dive into the companies that consistently generate the most buzz and the ones you specifically asked us to look at. We've certainly had many questions about giants like Safaricom, Kenya Power, and major banks such as Equity, NCBA, KCB, and Cooperative Bank.
The big names, yeah.
What do the reports reveal about their individual performance on June 26th? And maybe more importantly, what are the forward-looking projections?
Okay, this is where we get into the granular detail, starting with the undisputed king of trading activity, Safaricom.
Always Safaricom.
Who was absolutely dominant. Clocked an aggregate turnover of KES 276.82 million.
Wow, 276 million.
Yeah, to give you a sense of scale, that's more than half of the entire market's turnover for the day.
Just in one stock. Incredible.
Concentrated right there. It consistently appeared on both the top 4 no-buys and sales lists.
Which sounds contradictory?
Not really. It's not a sign of indecision, but rather of immense liquidity and sustained institutional interest. Big players moving in and out, but lots of action.
Got it. And the price?
For the day, Safaricom rose by a healthy 1.7%, closing at KES 24.55. Its performance often sets the tone for the wider market, as you know.
Definitely. Okay, what about the banks? KCB.
Moving to the banking sector, KCB Group was the second most traded stock, or counter as it's often called,
Right.
with a cumulative turnover of KES 56.34 million. As a large-cap stock, KCB significantly contributed to that overall bullish momentum we discussed.
How did its price move?
Saw a strong 1.9% increase to KES 45.3.
Nearly 2%, okay. And equity?
Similarly, Equity Group also played a crucial role in driving the bullish trend, rising by 1.6% to KES 47.85.
Another solid gain.
And notably, Equity was also a top foreigner buy, further underscoring that foreign confidence we just touched upon.
Right, connecting back to that inflow.
Exactly. These two banking giants really underpinned a lot of the market strength on the day.
So KCB and equity were strong pillars, definitely contributing to the upward trend. But what about the other major banks we mentioned? NCBA, Co-op Bank. Were there any that perhaps weighed down the market or had a different story?
Indeed, not every stock can be a gainer, even in a bullish market. While KCB and equity were driving gains, we saw a slight correction in some other key banking players.
Like NCBA?
Yeah, NCBA Group experienced a minor decline of 0.9%, closing at KES 57.50. And Cooperative Bank also saw a 0.6% dip to KES 16.90.
So small dips for those two.
Relatively small, yes, but they certainly put a small break on the overall market performance. However, what's really interesting
Go on.
is that despite this daily dip for Co-op Bank, our sources have a very specific and quite optimistic recommendation for its future.
That's a fascinating contrast. Co-op Bank dipped slightly on the day, yet the reports recommend a BUY. What's the hidden strength or long-term vision that overrides today's movement?
It really highlights the importance of looking beyond just the daily fluctuations, doesn't it?
Absolutely.
The recommendation for Cooperative Bank is a BUY, with a target price of KES 18.3.
Okay, 18.3, and it closed at 16.9.
Exactly. That represents a very attractive 7.6% potential upside from its closing price.
Right, and the reasoning. Why BUY despite the dip?
The rationale is robust and forward-looking. Analysts anticipate significant expansion of its subsidiaries, particularly its bank assurance unit.
The insurance side.
Correct, offering insurance products. They also expect the rollout of innovative products to grow its customer base and the opening of new branches to support crucial deposit mobilization.
So growth initiatives.
Yes, and furthermore, a potential resumption of oil exports in South Sudan is specifically cited as a key driver for growth in its South Sudanese subsidiary.
Ah, the regional angle.
Which could provide a substantial boost. It's a classic case of strategic growth initiatives potentially outweighing short-term price movements.
That's a fantastic example of looking past the daily noise and focusing on the underlying fundamentals and strategic plays. Are there other major banks that also received explicit recommendations worth highlighting? Maybe Stanbic.
Absolutely. Another significant banking player with a clear positive outlook is Stanbic Holdings.
Okay.
It also carries a strong BUY recommendation with an even more substantial target price of KES 183.06.
Well, 183, what's the upside there?
That indicates a robust 13.5% potential upside.
13.5%, very healthy reasons.
The reasons for Stanbic's positive outlook are rooted in the broader economic environment. Declining interest rates are expected to support their access to lower-cost funding.
Cheaper money for them.
Precisely. This, in turn, is projected to enable an expansion of their loan book as lending rates continue to ease, making credit more attractive and accessible for borrowers.
So it's a play on the improving credit environment.
And their ability to capitalize on it, yes.
Okay, interesting. Shifting away from banking now, let's talk about the energy sector. Big focus for many. How did Kenya Power perform? KPLC.
Kenya Power and Lighting Co., PA, or KPLC as it's commonly known, was a real standout top gainer for the day.
A top gainer. How much?
It saw a significant 9.0% increase.
9%. That's massive for KPLC.
Yeah, closing strong at KES 10.55. This kind of jump isn't something we see every day and signals perhaps renewed interest in the utility giant.
Definitely catches the eye. What about Kengen?
Additionally, Kengen Co., a major player in renewable energy, also showed strong performance, gaining 6.7%.
Another strong performer in energy. Any recommendation for Kenyan?
Yes, and it also comes with a BUY recommendation, with a target price of KES 6.61, offering a 10.9% potential upside.
Okay, nearly 11% upside for Kenyan. What's driving that?
This positive outlook is primarily attributed to shifting weather patterns that are supporting an acceleration in geothermal energy production, a reliable and increasingly vital source for Kenya, as you know.
Right, geothermal is key.
Plus, there's the ongoing expansion of their Olkoria I and IV plants, which are set to step up energy capacity by an extra 58 megawatts. These are strong, tangible drivers.
More capacity, stable source. Makes sense. It sounds like the energy sector is buzzing with potential. Were there any other notable recommendations from the reports, maybe covering a different sector, or perhaps a clear sell?
Certainly. On the positive side, still on BUIs, Liberty Kenya Holdings is another one.
Insurance again?
Yes, insurance and investments. It's a BUI recommendation, target price KES 11.52, indicating a promising 12.9% upside.
Almost 13%. And the logic.
The confidence here stems from an expected resilient underwriting business, basically. Their core insurance operations doing well, coupled with further growth anticipated from strategic investments, and a progressive dividend policy designed to enhance shareholder value.
So, stable growth, dividends.
Exactly, a stable growth play. Now, on the flip side, and this is equally important for informed decision-making,
Okay, the sell side.
Uchumi Supermarket Plc carries a clear and unequivocal sell recommendation.
Uchumi. Okay, why the sell?
This isn't based on a daily fluctuation. It's driven by fundamental, long-term concerns. Its retail business has shrunk significantly over the years, losing market share and operational viability.
We've seen that happen, yeah.
But critically, and this is a major red flag for investors,
What's that?
there's been an absence of financial statements over the past 5 years.
5 years, no financial.
None published. This complete lack of transparency has deprived shareholders of vital information needed to assess the company's health. Makes it almost impossible to make an informed investment decision.
Wow, yeah, that's critical.
And it reflected in the price, too. It was also a top loser for the day, down 6.3% to KES 0.3, reflecting this deep-seated concern.
That's a stark contrast and a crucial piece of insight, highlighting the importance of transparency and long-term viability. So, what does this all mean when we consolidate it into a broader picture of the equities highlights and overall trends from June 26? Give us the consolidated summary.
Okay, if we connect all these individual threads, the market clearly continued its bullish momentum from previous sessions, showing strong resilience.
Despite some dips.
Despite some dips, yes. This was primarily driven by robust gains in those large-cap stocks we discussed. KCB Group, Safaricom, and Equity Group. We also saw I&M Group contributing positively, reinforcing the strength in the banking sector.
Okay.
However, the performance, while overwhelmingly positive, was somewhat moderated or, offset by losses in East African Breweries, UMIM Ltd, NCBA Group, and Cooperative Bank.
Right.
The dramatic increase in trading activity and, crucially, that significant shift to net foreign buying.
Those are the key takeaways.
Those are the two most crucial indicators, I think, of the market's current vibrancy and a potentially sustained upward trajectory. It signals a healthy, active market.
That's a very clear, consolidated view of the Nairobi market. Now, while our deep dive focuses primarily on the local scene, it's always insightful to see how Kenya's market movements compare to the wider global landscape. What's been happening on the global market stage on June 26th? Are we seeing similar trends internationally?
It's always valuable to glance at the global context, just to understand the broader currents. Major global indices posted a, mixed performance.
Mixed, okay. Not uniformly bullish, like here then.
Less uniform, definitely. Bullish sentiment was most pronounced in European markets. The UK's FTSE 100 and Germany's DAX both gained a modest 0.3%. Suggests some cautious optimism there.
Modest gains. And the U.S.
In contrast, bearish sentiment dominated U.S. markets, which is interesting given their recent strength. The S&P 500 recorded a slight decline, and the tech-heavy NASDAQ fell by 0.3%.
Oh, a reversal from prior gains.
A notable reversal from the previous session's gains, yes. Could signal some profit-taking or maybe renewed concerns about interest rates, perhaps.
Possible. What about Asia?
In Asia, Japan's Nikkei 225 climbed a robust 1.7%, extending previous gains. Strong confidence there.
Strong in Japan. China.
China's Shanghai Composite edged down by a slight 0.2%. So again, a mixed picture across Asia, too.
So a bit varied globally.
Very varied. But what's particularly relevant for us is that even on the global equity market, we see similar recommendation types and rationales to what we've discussed for Kenya.
How so? Give an example.
Well, for instance, global giants like Apple Inc. and McDonald's Corporation have BUI recommendations based on steady revenue growth and market expansion, much like we saw with Co-op Bank's strategic place, right?
The growth story.
On the other hand, Procter & Gamble Company is on hold due to potential supply chain pressures from trade uncertainties.
External factors impacting the outlook.
Exactly. Demonstrating that external factors can similarly influence outlooks globally, mirroring how, say, weather patterns influence Kenyan locally. It really underscores that underlying economic principles and strategic growth drivers apply across markets.
So what does this all mean for you, our informed learner, as you navigate these dynamic markets? Today's deep dive paints a compelling picture of a Kenyan market infused with significant bullish momentum.
Definitely momentum.
A dramatic increase in trading activity and a welcome resurgence of foreign investor interest. Even with some individual stocks experiencing daily dips, the underlying strategic reasons for BUY recommendations on key players like Cooperative Bank, Stanbic Holdings, and Kenyan reveal a focus on long-term growth and fundamental strength.
And conversely, that clear sell for Uchumi serves as a stark reminder of the importance of transparency and operational health. Very important.
Absolutely.
So this raises an important question for you to consider. How do these detailed analyses of specific companies, coupled with broader market trends and even global highlights, influence your understanding of where opportunity might truly lie, or where caution is absolutely warranted?
It's not just about today's numbers, is it?
Not at all. It's about looking at the nuanced details and the bigger picture to inform your strategic perspective.
Precisely. What patterns are you noticing in how internal company strategies, external factors like interest rates, or even the geopolitical landscape influence these market projections? Keep asking those questions.
Keep digging.
For more invaluable deep dives into the markets, make sure you subscribe to Kenya Market Daily Podcast wherever you get your audio.
Please do.
And follow our channel on the socials. All the links are conveniently in the podcast description. Thank you for joining us for this deep dive.
Thanks for tuning in.
Until next time, stay informed and keep digging for those insights.